are some of the thoughts. It needs to hold here, right? So for the bullish scenario, it could consolidate a little bit more here and then needs to break out specifically above this, and above this. So 26 and a half, 27 was kind of like this very, very strong area for us because of this capitulation bar. This is the most important bar for us right now to overcome, because we overcame this, and this. At least kind of like, damage those, overcame. And we're in the vicinity of one half of that big capitulation bar. So bullish continuation is just pretty simplistic there. What if there is a more complexity to this? What if like we're looking at this area and let's say this area, and we are starting to notice how volatility is increasing in the second part? Like for instance, from this bar to this bar, there is a breakdown. There is definitely some supply coming in. Here we only had one really bar that was like supply driven, and then we had this break. Could we maybe like grab some kind of liquidity somewhere lower? So for instance, this, and then this 3 bars as the biggest demand area right here. I would say like these are the most important areas for us to consider. So I would say like if we want to grab the liquidity and we can't overcome this significant bar to the downside, I would say like break multiple levels, and here is your target number 1 around 20,000 or so, and then come back, because this could trigger some selling by weak hands, and that would increase the liquidity for the institutions to grab value at 20. The second scenario here, what if it goes even lower? One of those scenarios that we've discussed, 18.5, into the beginning of that zone where the most aggressive buying is, and then recover from there. I like actually both scenarios because both scenarios suggest some kind of shakeout, temporary short-term shakeout of weekends, and that's just what we need, I think, at this point in order for us to advance. Alessio, what do you think about this?
Yes, we really have to think in terms of a scenario here. So let's say that you're a very active trader, you want to trade this to the upside. Well, you can just use the 50-day moving average for your stop loss. But in case we like the price action stalls here and the demand signature continues to deteriorate, and so far we don't have a lot of demand coming in this trading range after the huge bar that we see in January, well, I suspect that the liquidity grab could be a very, very opportunistic strategy for us.